The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
A draft law seen by CoinDesk gives new insight into plans for the digital euro, and it is set to be proposed by the European Commission later this month. Well, time to check in with CoinDesk regulation reporter Jack Schickler. Good morning, Jack.
Morning, afternoon in Europe.
Well, yeah, indeed. Almost ready for Friday. But before we get into your Friday vacation plans, nope. You got to tell us a little bit more about this draft law.
Oh, if you insist. Well, we know that the European Central Bank has been thinking about whether to issue its currency, the euro, in a digital form for several years now. And now lawmakers want to get in on the act. And what we've seen is a draft bill that is set to be published within a couple of weeks that sets out all the rules that would apply, the framework. So it's not saying you should issue a digital euro. It's not saying it's definitely going to happen, but it's saying if you do issue one, then this is what it needs to look like. And that means rules like privacy, lots of things the digital euro can't do. It can't give interest to its users. You can't charge people in shops for using it. You can't have people use it as a store of value, so kind of keeping enormously large holdings instead of a conventional savings account. Lots of restrictions on exactly how it's used. Lots of them kind of modeled on the kind of privacy and anti-money laundering rules you get with the use of cash.
But is the purpose to not have this, to not provide interest and to discourage hoarding of it in a way to protect the banking interests in the EU? In other words, like if it provides interest for people, there would be no interest. There would be no demand for banking because you had a central bank that's giving you interest. Or if you're hoarding, there's no interest. There's no incentive to put it in a bank because you don't need to. But so is this kind of like a compromise with the banking industry?
Yeah, basically. I mean, the European Central Bank does not want to disrupt the financial system as it exists. They're, big on the side of traditional finance. So for them, what they call disintermediation, which is getting rid of the conventional banking system, would be a bad thing. They say, well, who would lend money to the economy, to businesses, to households if you didn't have banking system? So they don't want to do anything that disrupts that role that banks have. And if you could keep all your money in digital euros sort of directly with the central bank, then why some people would say, well, why would I bother having a checking account with a commercial lender? So I've definitely heard some lawmakers say as well, you're under the bank lobbyist thumb in doing all this. Why not be a bit more creative? Why it's as though they're designing the digital euro so that it's designed not to be too much of a success, because then it would take away from the commercial banking system. And that's definitely giving some people pause over whether, this is worth pursuing at all.
Some of the discussion that's being had in the U.S. is how do we prevent bank runs if it's so quick and easy to take out a CBDC or a digital dollar? Any mention like that in this draft law?
Yeah, exactly. It's not written very clearly, but we already know the ECB is thinking of things like holding limits. So, for example, each person would only be allowed to store 3,000 euros. That's just a bit over $3,000 in the form of digital euros. So any other money you have would have to hold in a commercial bank account or in whatever other form you want, but not in digital euro. And that is it precisely designed so that you can't move all of your money into the forms of digital euro. And in fact, this new law would like cast that into the statute book and say the ECB would be allowed to set this limit. And that's a bit similar. It's not just the US, the UK is also thinking of something similar. And they're thinking, how much access to digital pounds would people need in order for it to be a means of payment for your kind of day-to-day spending and when you go to the shops, but without it becoming a kind of alternative to a checking account or a savings account.
Jack, thank you very much for joining us this morning for us, this afternoon for you. I hope you can go and enjoy your weekend now.
I will do my best.
That was CoinDesk regulation reporter Jack Schickler. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.